Welcome. This is Your Money Matters with Ripon Ray. Today we are going to be talking about money just as I do every week on Tuesday at 5 p.m. If you want me to talk about any subjects that are of importance to you, call me on Better Bangla or text me or even tweet me. Ripon S Ray on Twitter. But today we're going to be talking about most important of all, of course, for me, is your tips of the week. And then afterward, you'll be receiving most important ones. I don't know how you feel about it. If you're a cab driver or if you are thinking of getting hold of a car to rent or to buy, the question is, where do you get the best deal? How do you get the best deal? And of course, as you look out for the best deal in the market in order to own your own car, what sort of options are they? And I will also be exploring positive and negatives of all those things because there are so many products and services are there designed for you. But the question is, what is good for you? But of course, as I always usually do, before I talk about the main topic, which is going to be on car, I'll be focusing on your tips of the week. So tips of the week is how to stop overpaying on your mobile phone bill. I'm not quite sure. Have you wondered? You've signed up to a contract which says something like, I don't know, from the top of my head, £25 per month and no more. But as time goes on, you realize you're nowhere near £25 per month. Instead, it ends up being something like 35 for first month, 65 the third month, and sometimes, oh no, let's not cry about it, even 95. So the real question is, how do you be in charge of your phone bill? So my tips of the week is how to stop overpaying. So first is renegotiate your deal. Now, if you're keen to stay with your current network, once your phone contract has ended, you can renegotiate your deal and switch to pay as you go if you want. Now, second, don't be afraid of switching suppliers or, in your case, providers. At the end of your contract, you can switch networks and get a SIM card deal only. Because, I'm not sure you're aware, if you actually just simply get a new contract with a phone and a SIM card, that will increase extortionate amount compared to just replacing with a SIM card. Now, third, avoid unexpected phone charges. So by this, I mean, let's say, for example, 09 or 0871 or 0872 and even 118 numbers will add up on your phone bill. So in other words, certain phone numbers that you call out will naturally have different charges. In fact, extortionate amount of charges without you actually realizing it. So watch carefully which number you call. Now, finally, well, I suppose it's not really final yet, but it's a long list to go. Are you paying for a phone you already own? So that's a question that you really need to think deep, because if you find an unexpected phone charge on your bill, you can dispute it by calling the Phone Paid Services Authority. So in other words, if you're not happy with the contract, there is a way around it and you can make a complaint. Phone Paid Services Authority. So they will look at the best practice to avoid racking up the unexpected cost in the first place. So the other thing is insurance. Now, if offered insurance for your phone, check to see if your home insurance or bank account policy covers it. So in other words, why pay for insurance twice knowing that it's already been covered by your phone? For example, I know when it comes to my insurance, my account with Lloyd's covers my insurance, so therefore I don't need to get another insurance with your phone provider. Again, why pay twice? And you may not even realize, for some people, you might be paying 3 times. Now, other one, upgrade. Once or an issue related to upgrade. Once you're due an upgrade, in fact, there's been research done into this. According to citizen advice, suggests that asking network providers to check your phone bills from the last 3 months. While unlimited data and text may seem like an appealing option, if you're not making full use of it, choosing the right allowance can help save money. So, in other words, of course, you can go for extra X, Y, and Z, but the question for you, do you really need it? So, that's my tip of the week. And before I conclude on this, let's just recap. First, negotiate your deal. Second, switch network providers. Third, avoid unexpected phone charges. Fourth is, are you paying for a phone you already own? Fifth, insurance. Don't get insurance twice. And of course, issues of upgrade. Do you need it? Do you want it? Or is it just one of those things that you think you need it but you have no clue about? If you're not sure, best thing to do is avoid it. Yep, so there we are. We talked about ways to save money on your phone. But it doesn't mean there aren't other issues that we need to think about. Now, this time, I'll be talking about car. Now, just like your home, well, actually, home is probably one of your biggest investment. You put money on your mortgage. But once home's out the way, the other thing we put our money on is our car. Now, I'm not sure if you own a car, or if you've thought about owning a car, or if you want to rent a car. Maybe you want to think about getting a car for your business. I'm sure those who are listening on radio and who are following me on YouTube, you may want to think about getting a car for being self-employed. Taxi drivers, Uber drivers, minicab drivers, those things involve having a car. But the question is, for me anyway, is when you get a hold of a car, what is the best deal? So that's what I'll be looking at today. So I'll be looking at how should you pay it, and why should you pay it, of course. And I'll be looking at also buying a car using a personal loan. I'll be looking at hire purchase, and also I'll be looking at personal contract purchase, and many more, and looking at positive and negatives of those things. So really what I want to give you is a highlight of types of deals are out there for your own purpose, so you actually learn from it. In the end, my show on Money Matters is about you learning about subjects that are dear to me, but also that you can actually learn and make decisions based on what you've gathered from me. So first, why should you buy a car, and on what capacity? So let's look at, in a sense of cars. I mean, what I'll be looking at is the difference between, let's say, buying a car outright, looking at getting a loan to buy a car, hire purchase, and you may not heard of it unless, of course, you are very informed about the world of hire purchases and loans and other things, is personal contract hire. And what does it mean? And of course, some people may even use credit card to buy a car, and many more. And I don't want to bore you with it. The list can be indefinite. But let's start with why should you use cash or savings when you buy a car? Yep. So yeah, using a car. The cheapest way to buy a car is to fund all or part of it in cash. This is because you'll have to pay interest on any loan or finance agreement. Therefore, you are not just simply paying for what you borrowed, but also extra on top, which ends up being extortionate amount. So if you decided to use cash, there are certain things you remember. Make sure you have enough savings left over. And of course, for what though? So this is where you have to think about getting money for an emergency after you paid for your car. Now, if you don't have enough savings to buy the car in full, use what you can afford to. Put down the biggest deposit you can. I suppose just like as you would do when you own your home, there is a recommendation that when you are thinking of getting a mortgage, best thing to do is pay off the highest deposit as possible. Now, when it comes to car, it seems to be the principle seems to be the same. Is if you got deposit, pay for it upfront. This means the amount of money you repay, which includes lump sum and repayment interest, will be much lower. So there we are. Even if you use money from your savings, you might be better paying for some of the time on your credit cards, so you benefit from credit card purchase protection. So in other words, if you buy it with your credit card, you have more rights because if something goes wrong, if the manufacturer is not going to compensate you, but your credit company has to. Hence, you'll benefit from your credit card protection scheme, which legislation allows you to benefit from. The other option is, apart from paying lump sum, if you've got that lump sum, if you don't have all, you can always pay half or how much you can, which will reduce your ability to be burdened with repayment with interest, is buying a car using a personal loan. Now, this is probably one of too few things that are quite popular. I'll talk about the other one a bit later, but let's stick with getting a loan in order to buy a car. You can get a personal loan from a bank. Let's be frank, most people do just that. Building society or finance provider if your credit rating is good. So in other words, before you obtain a loan, the loan provider, such as any bank it may be, Lloyd's, Barclays, whoever it may be, those companies or lenders will check your credit rate report to identify your rating, because it will give them an idea as to whether you'll be able to repay back in full without any risk involved. So that's why they will definitely check your credit report to see if you've got a good score. So of course, make sure the loan is not secured against your home. That means if you decide to, if God forbid, I'm not saying you will, but if something goes wrong and decide that you can't afford to pay for all sorts of reasons, this avoids any complication when it comes to your home. So, in other words, get a loan that is not secured on your home. So, I suppose when it comes to secured over your home, it means not connected with your home. It's just basically you get a loan on the basis that you pay loan and interest and no connection with your property. Otherwise, of course, you're putting your home at risk, and if you fail with the repayment, you will definitely find that your home definitely at risk. So, although we've looked at personal loan, where you get a loan from a lender, what are the positives and negatives? Let's look at the positives. Usually, the cheapest alternative to buying with cash. So, in other words, if you don't have money, that is the nearest thing that you will get. So obviously that is a very a good alternative. It can also be arranged over the phone, so it's easily accessible. We can get it on the internet, and you may want to even see one of your lenders face to face by visiting their branches. So it's easy to access. And third, it covers the whole cost of the car. But of course, it doesn't have to, because it depends upon what you agree with the lender. If you agree with the lender that you want to borrow 20%, 30%, 40%, is subject to the terms of the loans agreement. And finally, you can get a competitive fixed rate if you shop around. So that is a killer one, actually, is speaking of the interest rate. Now, when it comes to loan repayment interest rate, it depends on the terms of the agreement, of course. It could be variable interest or it could be fixed interest rate. Fixed interest rate means during the times of the loan agreement, you pay a basic fixed interest per year or even per month. But if it's variables, it just means it will vary depending upon Bank of England's base interest rate. So so it could go up and go down depending upon the interest rate of Bank of England. So what's the negative then? So negative is you might have to wait for the funds to be paid into your account, but some lenders make funds available almost immediately. Other borrowers might be affected. Borrowing might be affected. Monthly costs can be higher than other options. So in other words, you just need to read the blueprints or black prints and all other small prints to see if you can repay. But of course, if your credit rating is bad and you get a loan, it's more likely that you will be getting a worse deal. So the better your credit rating, the better the deal you get, because the lenders think you're more secure. Now, this is, of course, is personal loan. But how about hire purchase to finance a car? I mean, hire purchase is really the way of buying a car on finance, where the loan is secured on the car. So in other words, you don't own the car. You just have the usage until you've paid the full amount as per the terms of the agreement of the hire purchase agreement. So you need to pay, I mean, obviously it depends on the terms, that you need to pay a deposit around 10%, then make a fixed monthly payment over an agreed time period. So you need to find out what the terms are and what the repayment terms are as well. Then it will be based on that. You are bound by the agreement. And hire purchase agreements are usually arranged by the car dealer. So it's the dealer itself. So are convenient to arrange and can be very competitive for new cars, but less so for used one. It's partly because of when you're getting a new car, you're actually getting it there and then. If it's old ones, it can be very complicated because the risk assessment of those cars it's very difficult to measure, I guess. But of course, there's always positive and negative. Pros is quick again, just like I suppose personal loan. It's quick and easy to arrange. Again, you need low deposit, 10%, and flexible. There can be flexible terms, repayment based on what you can afford. It could be from 12 months to 60 months. Of course, it depends upon the types of car you've got, as well as your risk worthy and your income. You can be flexible, and just have a look and see. And of course, when it comes to interest rate, you can find competitive fixed interest rate. So you do need to again check the terms of the hire purchase agreement. There are negatives, let's be frank about it. You don't own the car until you made the final payment. So in other words, although you might be feeling all happy that you've got the car, but the reality is you don't own the car. It's owned by the hire purchase dealer who you entered into an agreement. So you need to really think about that. Until you've paid the final payment without default, then of course it's yours. Otherwise, I'm afraid it is not yours. Just bear that in mind. And the final cons tend to be more expensive for short-term agreements, partly because, again, they have to cover the cost of the car, and you do have to pay interest. So we looked at another one, hire purchase, as well as personal loan. Now let's move on to a third one. And third one is personal contract purchase. This is this type of car finance deal is similar to hire purchase agreement, but you usually make lower monthly payments. And bear in mind, though, that the total amount of money you pay often is higher. And instead of getting a loan for the full cost of the car, you get a loan for the difference between its price, brand new, and the predicted value of the car at the end of the hire agreement. This is based on a estimation on annual mileage over the terms of the agreement. However, at the end of the term, what you can get is trade the car in and short all over again, or hand over the car to the dealer and pay nothing. Keep a final payment, which is also known as a balloon payment, of this resale price of the car, and keep it. So in other words, it's not same as hire purchase in a sense of you owning it in the end, but really you've got lots of options. You can leave it, let it go after a certain period of time. You can just hand the key over and you pay nothing. So it's like leasing for a short period of time rather than with the intent of owning it. But the option is there. If you want to own it, just pay a bit more, and then it could definitely be yours. Now, what are the negatives and positives? Now, the good thing is, of course, if your income is low, your low monthly income payments is what is the good thing. Again, you also pay low deposit, usually 10%. Terms can be more flexible than hire purchase because you're talking about payment between 12 to 48 months. And of course, and a choice of what to do at the end of the repayment for some is also good because it allows you the flexibility that you want. Now, I know I talked about hire purchase, loan, also personal contract. Let's move on to, I suppose, another one, and hopefully we can call it a day on ways to get the best deal for a car, is using a credit card to buy a car. Now, for some, this may not be the best option because I think buying a car is a big thing. Usually, use of cards is least of your priority. But of course, using a credit card to pay all or part of your car purchase price will give you extra protection if something goes wrong. Because if something goes wrong with the car and the manufacturer is avoiding giving you anything, I suggest that you have a right over your lender, your credit card provider, I mean, because by law, they are as liable as the manufacturer who sold it or the person who sold it from. So it protects you, I suppose. On that regard, it's very, very beneficial for you. And as long as you pay at least £100 out of your credit card and meet your monthly cards payment, so in other words, you have not broken the terms of the credit card repayment, you are covered. But, of course, some dealers charge a credit handling fee. So you need to find out whether your dealer is charging you fee for using a credit card instead of other avenues, because in the end it does boil down to subject to the agreement between you, the borrower or buyer in this case, and the dealer who is selling on behalf of I suppose a car company. And sometimes they might charge you, I suppose, 3%, and some might not accept credit cards at all. So you need to find out who is accepting and who isn't, but you'll only find out about it once you have managed to do your research properly. I recommend that you do not enter into an agreement without knowing what you're signing yourself into. Otherwise, there will be problems later where you feel resented, you feel pissed off, you feel annoyed, and it doesn't do you any good. So bear that in mind. And finally, and let's move on to another one where you can get a new car, and it's quite a new one that has came about. Is where you use peer-to-peer loans to fund a new car. Or there's another term for it, like social lending, where individual lend to individual, which allows people to borrow or lend from each other without banks or building societies getting involved. And it's a new concept. It has developed, it's online, and they're not regulated yet. So the regulator, i.e. the Financial Conduct Authority, is actually looking into this to find out ways to regulate them. So if there is a risk involved, I'm afraid there is no compensation for it for you. Currently, if the lender has lost your money, there is £85,000 secured for you up to. But when it comes to peer-to-peer lending, unfortunately, there is no security. If there are risks, you take the risk. If there are benefits, no doubt the benefits also come with you or come for you. So so what does it involve? You can find peer-to-peer loans on websites like Zopa. So in other words, it's primarily an online peer-to-peer. Really, although it's online, but really the idea behind it is a bit like, I suppose, you asking your mate, saying, "Oh, could you?" But mate in the context of businessy though, it has to be slightly businessy. And your mate has decided to support you and give you the money on terms of, I suppose, let's say, interest and fees charged. So again, it is contractually fine, but of course is not regulated yet because it's a new concept, and the Financial Conduct Authority, the regulator, is still getting used to still trying to find out ways to regulate this market, because this market is quite new. However, you will still need a good credit score to get the best rate, and missing payments will also affect your credit rating. Interest rates will vary depending on your credit score too. So you might find peer-to-peer loans offer better interest rates than banks, but this isn't always the case. So I suggest, again, you do your research. In the end, don't forget, what we are dealing with when it comes to buying a car is lenders, whichever way it is, are looking to lend money to you for a specific purpose. If you think you've got the the ability to repay the agreed amount without any potential risk involved to the lender, then you're fine, because the lender does not want to lend to someone who just can't afford to sustain payment. So it's all about being real, I suppose. So if you think you can do it, then obviously that's perfect. And if you can't, then what can you do? Of course, maybe first thing probably you may want to think about is not to get hold of a car at all. And maybe you need to think about forgetting the business of borrowing or hire purchasing a car or getting hold of a car. So no more becoming a self-employed taxi driver or working for Uber or whoever. Then the question is there any other problem that you might have that's preventing you? It could be you need to think about savings for other occasions. You may need to think about savings for emergency fund. And you do need those things. We do need certainty. If things go wrong, how can you cope with the stress of not having the money? And we all know not having money can be very stressful because it leads to arguments at home, it leads to conflict between husbands and wives, it leads to tension between children and parents. We may not talk about it, but it is very difficult. So, yes, you want to get hold of a car. We talked about different things about car, but of course, if you can't afford it, maybe you may want to think about getting into the car world. Why not use London Transport? However, for now, let's take a break. We'll come back on Your Money Matters to talk about more on money. Give us a few minutes.
ট্রাভেলসের জগতে সকলের পরিচিত ও অত্যন্ত জনপ্রিয় একটি নাম হিলসাইড ট্রাভেলস। চায়না